Okay, we're recording, yeah?
Yeah. And I'm going to share my screen.
Fantastic. Everyone wants to gather around. Okay, go for it.
So do you want me to start?
Yes, please, you go for it. I'm going to mute us now so that you don't hear all.
Okay. Great. Okay, well, this is just a brief presentation on the accounts of Nudge Community Builders Limited. So the first page we've got here, actually, I'll just go back because before this we have the, oh no, we don't. Yeah, we do. No, we don't. Sorry. There is a director's report which isn't in this version, but the director's report will sort of give you some background, narrative background to what the numbers are. So I'll just present the numbers. So the first page here we have is the revenue account. And it's called revenue account because Nudge Community Builders is a society. And if it was a company, that would be the profit and loss account, but essentially it's exactly the same thing. It is a statement showing the income and expenditure that occurred in the year ended March 22. So this is the summary page of the revenue account, and you can see the headline figures there. So there's turnover, which is basically sales, and that includes rental income from the various properties. And then you've got administrative expenses, which is pretty much all the expenses, and other operating income, which is mainly grants. And this page is actually, there's much more detail on this at the last page, which is called the detailed revenue account. So I'll skip down to that, which will show you more detail. So this is a detailed revenue account, which is just the detail of the page we were just looking at. So it gives a breakdown of turnover there, which is consultancy, sales and rental income. If you're comparing to last year, I don't know why the sales figure last year is £27,000 because we didn't do the accounts for that year and haven't been able to find out from the predecessor accountants what is in that number. But the 71,000 rental income is from the Clipper, the plot. I think, yeah, those two properties. And then direct costs is just a few bits of consultancy, I think, that relate to the consultancy sales. And all the main expenditure here is listed under administrative expenses. So obviously the headline figure is wages and salaries. And then the other costs are broken down. I think that's fairly self-explanatory. They are what they say they are. Nudge received quite a lot of grant funding, which it then distributed to others. So if you go a bit further down, you can see grants paid out, £302,700. And then other operating income, you've got grants received, £605,000. So of that 605 received, 302 was paid out to other local organisations. So the total expenditure there is 698,000, of which 302 is this paying out of grants. So Nudge's own expenditure, if you like, would have been 396,000, a large part of which is wages. So if you go down to the bottom here, you can see that there's a small profit there of £9,000. Some tax adjustments to do with deferred tax, which is complicated, so I won't go into it. Means there's a tax credit of 4,600 and profit after tax of 14,000. So a surplus, which is good news. So that's the detailed revenue account, or detailed profit and loss account, as it's normally known. So the next statement after that one is the balance sheet. And the balance sheet is basically a statement of the assets that Nudge owns. the things it owns and the money that it might owe to other people. So the main assets, obviously fixed assets there at the top, £681,000. That's the cost of buildings acquired and a little bit of equipment. And then debtors is money owed to Nudge, cash, obviously bank, cash at the bank. And then you've got creditors, amounts falling due within 1 year and amounts falling due after more than 1 year, 142,000 and 199,000. Now those numbers, all those numbers, you can see there's like a blue 3, 4, 5, 6. Those blue numbers refer to notes. So it's easiest to understand these headline numbers by going down to the note, which I'll do now. And before I do that, the bottom half of the balance sheet, you've got called up share capital of 449,000. And that excludes 100,000, which has been pledged by Cooperatives UK. And I think that is waiting for agreement of heads of terms on the Millennium Building. So let's just have a quick look at the notes that explain a bit more about the balance sheet. So note 1 is just accounting policies. It's not very interesting really. So I won't go into that very much. So note 3 is the fixed asset notes. So that shows what the detail behind the 681,000 fixed assets in the accounts. So it's just show, in fact, in this year there was very little purchase, just a little bit of equipment of £867. So all the assets here actually were already there at March 21. So the main movement in fixed assets in this year's depreciation, and that's basically writing off the cost of fixed assets over periods, over future periods. So, the future periods in which those assets will be used. So we've had some discussion with the directors about what the appropriate accounting policy is for depreciation. And currently the policy is 2% reducing balance per year. But I mean, that's something we'll discuss and perhaps revise going forward, because it probably felt that might be a bit too much depreciation there. Then debtors, you've got trade debtors, which is money at, like, sales have been invoiced or rent has been invoiced, it's owed to Nudge. And prepayments is, in fact, what that is where Nudge incurred some costs which are grant funded, but the funding is paid in arrears. So effectively that funding is owed to Nudge. So that's mainly what the 35,000 is. And so creditors, amounts falling due within 1 year, which means that need to be paid at least by 31st March 2023. Mainly quite small balances here, apart from deferred income revenue grants, and this is where Nudge has received some grants but hasn't spent them yet. And so this isn't really a creditor, but it's money that's being kept in creditors, so it'll be released into income next year. So it's like deferring the income until next year. So next year, that 123,000 will show as income in the revenue account, and the expenditure that it relates to will be in the revenue account as well. So if you didn't defer income like that, you'd have too much income in 1 year and too little in another year, and it would, the profit would swing backwards and forwards. So that's why you defer unspent grant income. So that balance is the vast majority of creditors. There's a loan there of 12,000, which is actually 24,000 total, and the other 12,000 is due in more than 1 year, and is part of the other loan of 77,000. I think it's, well, the directors will know better. I think it's a Plymouth City Council loan. And there's a 65,000 loan from Rank, which is due in more than 1 year. And capital grants, again, this is a strange accounting thing. It's basically where a grant has been received and it relates to the purchase of a fixed asset, then you release that grant to income over the period of that the fixed asset is being depreciated over. So say if the fixed asset is going to last 100 years and you depreciate it over 100 years, you also depreciate the rate, the relevant grant for the same period. We haven't managed to determine yet exactly what that grant was for, because again, this relates to previous years and we weren't accountants then. So probably that does need to be amortized or depreciated a little bit, that 122,500. Then you've got note 7 is the share capital. So that's, we discussed that before. 100,000 is still due from Cooperative UK. That is the notes. I think that is probably the end of my presentation, although of course I'm happy to take questions. If you unmute yourselves, you could ask me a question if you like. I hope that's been informative.
Thanks very much, Patrick, indeed. Are
Okay.
there any questions for Patrick? It looks like you've done an extraordinarily comprehensive job on explaining the accounts. Everyone seems very happy. So thank you very, very much indeed.
Okay, well, I mean, if anybody does have any questions later on, then just pop them in an email or something. I'm happy to talk to anyone directly if you like.
Perfect. That's brilliant.
Thanks,
Okay.
Patrick.
All right, thank you.
Thanks.
Do you want me to stay on the line, or can I go home now?
Hang on, I'm just going to stop recording.